our floor show. Joining me now is Great Hill Capital Chairman Thomas Hayes and Freedom Capital Markets Chief Global Strategist Jay Woods, live from the New York Stock Exchange. Tom, you and Jay, Tom, I'll start with you. You both like Disney.
There's no question about it. You know, this rally that we've seen in the last 4 weeks, it's like Buffett always said, if you wait for the robins to sing, it's already spring. We're up 15% since Donald Trump tweeted, now's a great time to buy stocks. Last week he said, U.S. is going to boom. Disney's a beneficiary. We were on the network 4 weeks ago saying buy Disney at $85. It's $111. Guess what? It's going over 200 over the next 3 years. All of their divisions are hitting on all cylinders. Mid-double-digit growth, the cruise ships, the parks, streaming, 180 million subscribers. They added 2.5 million subscribers. This is a high-quality business with a durable moat.
Well, and Jay, the concern as we were going into Disney's earnings was worries about the theme parks, and that ended up being one of the positives, along with, of course, who was going to replace Bob Iger and Disney+. Jay, why do you like Disney?
Well, I look at it from a technical level. This stock had been beaten down for years. We finally had a nice constructive base and then a breakout above that 200-day moving average, a breakout of a long-term downtrend, and then you put all the fundamental stories that the last guest just mentioned. And yeah, this is a recipe where if you want to get in this name, risk-reward, there's much greater reward on the horizon than the risks. Now, we'll see what the succession line is, but something tells me Iger is going to do this one a little bit better than he did the last time he left Disney, and that shareholders that have been holding on are finally going to be rewarded. And if we can get to that 3-year target, we'll be talking all-time highs. But that news this week was fantastic. Technically, it's blessed as well, so I love it for a long-term play and put it away.
We also showed our viewers while you were speaking, Jay, Uber. You like Uber. You say that this is a stock that's going to be $120 by the end of the year. Tom, I do want to go back to you. Let's talk about the macro story, because one of the things you say, and I think this is so interesting, you say, but the good news, there's a lot of trapped bears out there.
Yeah.
I like that terminology. And what you say is that each new trade deal, as it's announced, is forcing them to buy everybody that's sold wrong.
Yeah, you bet. Beginning of April, record selling, $1.1 trillion of equity sold in the hole by hedge funds and CTAs. Every single new bit of positive news. Now they've covered the shorts. Now they have to chase up. They did not believe this was going to take place. They're going to, every single headline. And by the way, earnings growth was double what was expected, even in the face of uncertainty. Now that we have more certainty, guess what's going to happen? Upgrades to guidance. They're going to have to buy more and more and more. Like Donald Trump said, the market is going higher.
Well, but also, too, Jay, just to be clear, I mean, we are still in this tariff environment. We had this 90-day pause with China, which is good news for a company like Walmart. We're getting Walmart earnings tomorrow. That's going to be at 7 a.m. Eastern time. You say that Walmart is going to be the barometer for the tariff trade because of how that they handle what has been the last quarter for them, which, of course, was concerns about their supply chain.
Yeah, I think we're still a far way from certainty in this market. We're getting a little more certain, but there are a lot more questions on the tariff front, and I think Walmart is the bellwether that may be able to give us a little peek behind the curtain. They were the first company to really guide in January. They turned over in January before we peaked February 19th, broke a long-term downtrend, held the 200-day moving average, coming back, but still not back to levels where it was trading before. Granted, it was up 100% over 12 months between December last year. Now it's given back a little bit. We'll see what that guide is. If they can tell us that inventory levels are fine, they're not concerned about tariffs, then we're a little more clear about what the future will be as far as the consumer goes. So I'm watching it closely, and right now it's at an area where I'll wait to see how things shake out. But if it does sell off, I would buy it towards that 91 to 86 level for a long-term play and put it away.
Yeah, no, I mean, and the concerns about your Walmart, your Target are fair enough. And also, Tom, we're going to get a big data dump in the morning. So we're going to get retail sales. We're going to get initial jobless claims, PPI. That, and then we also have Fed Chairman Jerome Powell speaking. So there's a lot at play tomorrow that could rock the markets.
This is the big question between the hard data and the soft data. Consumers are saying the world is ending, but they're going out and spending like there's no tomorrow. So let's see if it holds true and we get good retail numbers tomorrow. That'll be the catalyst. You know, looking in the rearview mirror, we definitely see the uncertainty. Looking through the windshield, which is what the stock market does, that uncertainty is mitigating. We've had the VIX crush. The uncertainty has come out of the market. We look forward to positive things moving forward.
And you're both very bullish. Jay, is there anything that you're concerned about right now that could upset the the market, upset the momentum that we have, because, we were climbing this wall of worry. It was so unfortunate during all the tariff drama. If that indeed is behind us and these trade deals continue to be cut once President Trump gets back from the Middle East, does that tell you that the rest of the year is going to be positive?
Well, we've just kicked the can down the proverbial road for now. We still have 90 days on China, 90 days on some of our allies. These tax levels, these tariff levels will have an impact on the bottom line. So once we get some more clarity on that, 10% across the board, that seems to be the magic number that the market is absorbing. But we still do not know exactly how this will resolve. But we do like the progress. The one thing we do know, the worst seems to be over. That washout, that April 7th low, that was worst case scenario, panic, capitulation, sentiment at all-time lows. As a contrarian, as someone that follows these markets, that was the time to buy. Now I'm taking a little on the sidelines because this process, this V-shaped recovery, probably will pause before we make new highs. Watch your favorite stock, Cheryl, NVIDIA, when they report on on May 28th. I know we always talk about that every time I'm on the show, but that will be a tell, because we did see the Mag 7 stocks continue to spend. Their numbers should be good. They were good last quarter, but we were afraid of DeepSeek. Now we're afraid of tariffs and China relations. So let's see how they do. If NVIDIA can break out to new highs and we still have 16 points to go, then the bullish horns will be sprouting out of my head. Right now, I'm kind of on the sidelines, letting things digest.
Well, I think these deals that President Trump has been inking so far in the Middle East, and it's only day 2 of his trip. Boy, I tell you, this is magic for NVIDIA, and obviously a lot of those companies that are trailing him right now and following him around to these meetings and these summits, in particular with the Saudis. Jay Woods, Tom Hayes, guys, thank you so much. Great to have